Zero. Here we are right now. The Dow was just down 200 points. The commodity related indexes, the silver has come all the way down. We featured that silver. We featured the put side of silver. We featured all day long that there was a market correction coming. We told everyone over a week ago that there was the top of the pattern. We said that the commodity side, the gold side, the copper side, the oil side, everything was just like it was in 2008. And the bear side of the market is a good place to be. We even pointed it out at 5:30 in the morning on 5/5 of 2001. We did all of the indices and stock market funding yesterday. We said that shorting the market in the morning in the pre-futures market, I said clearly it's a short seller side, and once the correction clears out of the way, we've got very good positive things going. We've got ICE Brent crude is down 11.89. We've got the WI crude June contract. We got that down 10.70. We got gasoline June futures down 0.25. We've got heating oil for June down 0.2763. We got natural gas down 0.317. It appears to me that we are correcting the way that we should. 2008, we had the same problem with high oil, price gouging. All of that's coming off of the table. In fact, we view it quite positive, because that means that if we pay less at the pump, the good qualities that have pulled back, we're going to have some good buying opportunities in some of the names. The thing that I really want to cover here is how the Dow Jones was down just 200 points. And the NASDAQ comp and NASDAQ 100 are fair and pretty well. They're holding in there. And the S&P 500 has corrected 13 handles. Not a huge sell-off in the S&P 100, is down 7.48. So when I look at the broader market, we needed a correction. We said it was coming, and it's here. The short side, making money on the downside, is here. The bull side in the shorter term got ahead of itself. So prices need to come down. That's the good thing. Now we get to go goodwill hunting. We also said a week ago and 10 days ago, we said that as the earnings came off, that there would be little catalyst to drive the overbought indexes and overbought equities higher. And we're seeing the fruit of that. So now we're going to take advantage of when the sellers do clear out. We've got some good things going. Gold is down $46 an ounce. The transports, on the other hand, are up 56 handles. So as we come down below $100 on barrel of oil, I classify that being about as bullish as it can be. One thing that I would like to clear up for the MMTs in our Worldwide Trader Network is that, excuse me one second. One of the things that I would like to clear up for people is that the driving season's about 2 weeks away. We've got the biggest one-day pullback and in all of these commodity related names, and I'll be happy to pull that up and show you. Here we go. We're going into the closing bell in 20 minutes. Look at the haircut. These were stocks where people bid that minor stock up to such overbought levels that they needed a huge haircut. And we've seen these kinds of haircuts that happened in 2008. The Morgan Stanley related, and we have all of these indexes, and we talked about them all, and you can see all of these names in the CRX.X. It's on our homepage. We said there was a correction. We showed the overbought. So making money to the downside is good. Let's take a look at the oil patch. Once again, nothing but distribution. Nothing but distribution. Because they were all bid up. Everyone was euphorically in these stocks. All the oil patch. Oil's down over $11 today. Look at all of the names. Some of these names are worth owning, though. Some of these names will continue to have good earnings. So I'm a bull on pullbacks. Here, in the Morgan Stanley Oil Services, there's some good names in here. And as they pull off of their and shake all of the people out, there's margin debt. Remember that everyone got crowded on margin debt. So here, this is oil services right here. There's some good companies in here that are coming off the overbought process. We see these exuberant cycles. We always tell people they end up in a bad way. And yes, we have compassion for the investors out there. On the other hand, because oil's coming down, one of the things that we're seeing some good positive things is the transportations. The bulls are here to buy because if we continue to contract in the oil and we're going to pay less at the pump, that means that the mid-year current cycle, we got the big unemployment number tomorrow. Let's not forget that. So the Dow Jones, every one of these stocks in here, there was a pretty big haircut. This is called the Dow Jones Composite. And it's only because they were overbought, folks, and they needed a correction. The Dow Jones Industrial Average, all 30 names here are down except for a little bit of green on Intel. Whoop-de-doo. Cisco, the two dogs. But look at the haircut there. So basically, it's a wide range haircut. And it's an over-bloated commodity market. And the thing about it is, it's good for the consumer. It's good for the bull investor, because if we maintain the levels that we need to maintain where the consumer is not going to be putting all the money in the gas tank, that's going to be a good thing. So I just wanted to point out to everyone, once again, we gave everyone a warning as to what side of the market to get on. And we were correct. It's all live. This is live. What we put up yesterday is live, and what we put up a week ago, what we put up in February. So we're in the middle of a market correction. And we're in a reversal because we're overbought. And this is how they work, everyone.